Good morning, everybody. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Report, we would like to thank you for joining us on our breakfast meeting this morning. It is Tuesday, the 1st of June, 2021. Please note that this meeting is being recorded and is also being broadcast live on our Vetiva online page on Facebook. This meeting is set to last for 30 minutes inclusive of Q&A. On our agenda today, we will get a rundown and outlook for the capital markets from our traders, Sheung and Omorige, after which we will move to our media partners for their own updates. We will now start off with Sheung from the Global Equities Desk. Good morning, Sheung.
Good morning, Chidoze, and good morning, everyone. Like Chidoze mentioned, we'll start off reviewing performance of some markets in West Africa. Today, we'll be specific with Ghana and Nigeria. So we start off in Ghana, where the index started the new week unchanged. It was a quiet session, as there were no gainer or losers in the day. Trades were actually few and far in between, as Bank led the volume traded with just 20,000 units traded. We believe the quiet market is not unconnected to the fact that investors were on the sideline waiting for the outcome of the MPC meeting of the Ghana Central Bank, which eventually voted to cut the MPR by 100 basis points to 13.5%. And contrary to expectation of many analysts who had predicted a old decision for the MPR. With the flat close in the session, the year-to-date close remain at the healthy positive level of 24.7% for the Ghana equity market. We expect activity level to pick up in the coming session, with investors favoring the equities market. Okay, and just to circle back on the decision of the Ghana MPC, analysts believe the decision reflects the broad improvement in key real sector indicators and the expectation that inflation will remain within the targets band in the next quarter, despite price pressures from the implementation of the new tax measures. So we'll continue to watch out for that and to see how that affects the market. And like I mentioned, we believe it's slightly positive for the equities markets. So moving back to Nigeria, and unlike Ghana, the index kicked off the new week on a positive note, just like we mentioned yesterday, concerning our expectation for yesterday's session. So we kicked off on a positive note, advancing 47 bips, largely powered by the 278 basis point gain in Boa Cement, as well as the 143 basis point gain in Guarantee Trust Bank. We saw Axis Bank, Dan Sugar, WAPCO all ended the session lower. Incidentally, the session was the last trading session of the month. For the market performance, gains in GT Bank, amongst others, lifted the banking sector higher to join the oil and gas sector as the two sectors with a positive close, while other sector closed lower. Activity level, speaking to that, that dropped in the session. When you speak to volume and value, that was about 12 and 42% drop in the session. And there we saw the market, as usual, crawl back to the slow activity level that we've become accustomed to. So just a quick review of the market in May, because now that we're in June, it was a negative month, as the index only recorded just five sessions of gain all through the month all through the month. The month also closed negative 3.52% as investors stayed away from the market, from a market without any form of catalyst, with as well as with a better and more impressive alternative in the fixed income driving the market deep in the red. So going into today for us, we do not see any deviation from previous sessions, while market expectation will be for investors to continue to stay away, while we believe discerning investors continue to cherry pick while staying contrarian. We also expect more cross trades in names like Seplat and Nestle, as we have seen demand in those two names with few offers to match the demand. We believe gain in any of the large cap counters will dictate the final direction of the market in today's session. So that's it for the equities market. Thank you very much.
Thank you very much, Shim. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, Chidoze. Good morning, everybody. I'll be taking a rundown of the Nigerian fixed income activities for yesterday. I'll start with the money markets. There was no official liquidity figures for yesterday, but we believe system is still very liquid, and our estimated opening figures for yesterday was around 300 billion negative. This was a significant improvement from Friday's opening figure of 448.5 billion negative. This improvement in system liquidity on Monday, coupled with the reduced funding pressure, as there was no major funding need on Monday, costing the interbank rate to losing by over 600 basis points to trade around 12% levels from the 18% levels that were recorded on Friday. We expect the money market to trade at lower levels today as OMO repayments of 55.46 billion come into the system today. Moving on to the FS markets, the parallel market remained stable to trade at 495 naira to a dollar on Monday, while the earning window traded at a high of 420.33 naira to a dollar, closing at 412 naira to a dollar. While the earning window turnover decreased marginally by 19.6% to close at $125.44 million on Monday from the $156.06 million recorded on Friday. Yeah. Crude oil price recorded a marginal growth on Monday, maintaining its performance as it finally hit the $70 mark. This growth was largely on the back of optimism regarding the global oil demand. Nigerian external reserve dropped by $4.11 million on Friday to stand at $34.24 billion US dollars. We believe that the Naira will continue to hover around these levels in the interim in the absence of any significant inflow of FX into the system. Moving on to the Nigerian Treasury Bills market, the T-bills market kicked off this week on a very quiet note with few trades consummated across the benchmark curve. The most sought after paper yesterday was the newly issued one-year paper. That's the May 26, 2022. Offers on that paper maintained to trade around 9.2% levels. We also saw offers on the long end of the OMO spectrum at about 9% levels, but bids on that end were scarce. The May 31st, 2021 special NTB matured on yesterday with CBN redeeming the holdings with non-banks clients while rolling over the holdings with banks. A new special NTB was issued yesterday with a maturity date of August 30, 2021. It has a tenure of 91 days. This new special NTB traded at around 7 to 8% levels in the market yesterday. Few trades were also consummated on that end. Our expectation for today is that the T-bills market will trade actively on the back of the OMO repayment of 55.46 billion, which will most likely spur buy-side interest in the market today. I'll conclude with the Nigerian bonds market. The bonds market traded on a moderately active note, and this sentiment was largely spurred by the intense demand for some specific maturities in the market yesterday, especially the 2026, 2027, 2045, and the 2049 maturities. We believe the reason for the intense demand witnessed on the aforementioned papers was because some players who had oversold those maturities were trying to cover their short positions in the market yesterday. Despite the intense demand witnessed in the bond space yesterday, few trades were consummated across the benchmark curve as offers were far and in between. The exact words that were used in the market yesterday were that was that sellers are hiding, and this is probably for them to be able to gauge the level of demand in the market and then adjust their prices accordingly. In another news, the DMO revised the bond issuance calendar for June, opting instead to issue the 2050 paper rather than the 2045 that was originally scheduled, as it looks to raise as much capital as possible in line with its borrowing plan for the year. We expect the moderation in the bonds market to continue as players continue to cover their short positions in the market. That concludes it for fixed income. Thank you.
Thank you very much, Amorige. We will now conclude with Temple from Frontier Africa Reports and their updates. Good morning, Temple.
Morning, Chidozie, and good morning, everyone. We know that OPEC Plus meeting rather, is holding today. They already commenced with a virtual meeting yesterday, where Barkindo, the Secretary General, made some comments, giving some kind of a forward guidance relating to what the highlights of the meeting will be. And part of those highlights will be that COVID-19 pandemic management will continue to dominate the conversation. And of course, the declaration of cooperation, production cuts, and the demands that we're beginning to see around oil price appreciation and all of that will also form part of the conversation. More significantly is the return of the Islamic Republic of Iran to production and exports. They will be joining the markets. Barkindo made known that there will be some kind of an orderly and transparent resumption of Iran into the market, or admittance of Iran into the market at this point, so that they can maintain the price momentum that they are recording at the moment. So we'll wait to see how the joint ministerial monitoring meeting will pan out, which is commencing today, and of course other parts of the meeting, and hopefully be able to give some updates eventually. Total also has just rebranded to Total Energies. That's Total, the global body in Paris, in France. The decision was actually reached at their AGM, their ordinary and extraordinary general meeting that held a few days ago in Paris. And the adoption is actually due to the strategic transformation of the company into broader energy spectrum. Of course, there's also a new identity in terms of branding and logo introduction at this point in time. Yesterday, we hinted that Ghana will be having their meeting, the briefing rather, on the outcome of their MPC. Part of the outcome of the meeting is that they've now reduced the MPR from 14.5 to 13.5 by 100 basis points. I think part of the outlook that Chima gave yesterday is something related to that, and that worked out in line with your expectations at Vetiva here, which is solid. In southern part of Africa, Aspen Pharmaceutical has now pledged equitable vaccine access for Africa. But I think more specifically it will be for South Africa. We probably know that President Macron is in South Africa. He met with President Ramaphosa yesterday, and the conversation has actually been with some pharmacists and scientists, and of course some other captains of industry in the country. That was basically where the this decision was announced by the chief executive or group chief executive of Aspen Group yesterday. The point is they intend to make more vaccines available to Africa, South Africa, and other parts of Africa. In Tunisia, they're expected to have their investment forum in June, but that has now been postponed. It's an annual event that holds in June. It's now been delayed till next year. Basically, there will be no forum this year. And we all know it is due to COVID-19 and, of course, the restrictions imposed by several other countries. Some of the countries in the northern part of Africa that are expected to be able to participate will certainly not be able to participate this time. Morocco, for example, has shut down its Barca against 50 airlines and all that. So people can't really go in and come out. And that's the reason why they're delaying the investment forum this year to next year. These are the headlines we're looking at for today, and that's the much we can share. Thank you for listening.
Thank you, Temple. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and you will be asked to unmute your mic and then you'll be able to speak. Or for those joining us on Facebook, you can use the comment function and we will treat your question. A quick announcement while we wait for questions. Tomorrow, Michael Famaruti, who is the chief economist and the head of the Steers data team, will be joining us tomorrow to speak on public debt sustainability as a constraint to Nigeria's development. I now see that we have a question from Dorcas. Dorcas, you may unmute your mic and you can ask your question. Thank you.
Okay, good morning, and good morning, everyone. Just a quick question for the research team. So half year is approaching and we should start seeing H1 results from July. So my question here is, what are the broad expectations in terms of year-on-year growth from the banks? And maybe there are any names that can stand out or that you already see? That's my question. Thank you.
Thank you for your question, Dorcas. I believe you asked about the banks, correct? I will let Joshua answer that. Josh, you may go ahead and answer the question. Thank you.
All right, thank you very much. Good morning, everyone. So as regards the banks, what we saw looking at Q1 results was that a number of them had a bit of a dip, a decline, especially on the interest income side, but specifically from fixed income securities. Whereas obviously loan growth has slowed down quite significantly, but the banks still recorded pretty much flat interest income from loans year on year. Now for Q2, expectations are that we'll probably see a little bit of an improvement, although the majority of the positive results we're expecting are probably going to come in the second half of the year. Obviously, most of the tier one banks will not be releasing their results in June, but rather closer to August due to the audits of half-year results for the declaration of half-year dividends, although we might see some of the tier two banks release earlier than most. But overall, the expectation is that there will be an improvement from Q1 position, but year on year, it might still be a little bit of a negative performance, simply due to the fact that Q1 performance was significantly worse year on year. But we will soon be publishing our H2 outlook, and we will have more detailed expectations on the industry and all of our coverage banks in that. Thank you.
Thank you, Joshua. Dorcas, I hope that answers your question.
Yes, it does. Thanks.
Do we have any further questions? I see we have no further questions. Just again, tomorrow, Michael Famaruti, who is the chief economist and head of the Steers data team, will be joining us tomorrow to speak on public debt sustainability as a constraint to Nigeria's development. It promises to be an exciting one. We have now come to the end of our meeting today. We would like to thank everybody for joining us. We continue to encourage everyone to keep safe, and we look forward to having you join us again tomorrow at 8:30. We hope everybody has a good day. Good night.